Hi, good evening, everyone. So welcome back to Plan 258. Okay. Can you hear me well? And okay, you can open your camera. Uh, some of you did not submitted many assignments, so can you submit the assignment in Moodle, okay, in level 2? And of course, if you are late, so per day you get penalty of 1%. Okay. For the last week assignment, so I updated so that you can submit until next week. Yeah. Okay. Some of you have submitted the assignment. I think only 5 of them. So if you want to present your assignment about personal investment, okay, go ahead. Yeah. Uh, I think some of you get 100 in the assignment, so you can present so that it will give inspiration to your classmate. Okay.
Prof, can I present?
Yes, go ahead. Then
Can you see my screen?
yes, very good.
So for this homework, you were asked to consider 3 possible investments or businesses assuming a budget of 10 million pesos. So I considered 3. So first is condominium rental. Second is the convenience store. And third is the coffee shop. So these are assumption values. So condominium rental of 1-bedroom unit. So down payment of 1 million. Furnishing of about 200,000 pesos. So that gives it total initial cost of 1.2 million. And then I also calculated the monthly O&M and monthly approximate gross income or rent. So
Really?
before
50,000?
this, assuming a high-end area. So before calculating, you have to convert it first to annual, so that will be times 12. And assuming inflation of 3%. So here are the cash flows per year, assuming an inflation of 3%. And the rightmost column is the conversion to present value. And using that, here are the corresponding parameters that we can consider. So I performed the same analysis for the convenience store. So for this, based on my research, the around 7 to 10 million is required for initial franchise fees, construction costs, etc. In addition to annual franchise fee. And then there's also an assumption of manpower for a while. This should be higher. This should be higher. But essentially the manner of calculation is the same. So we can
Yeah.
change it to maybe 18,000. So essentially the manner of calculation is the same, or 16, or and then for this I assumed an annual interest of 2.5%. So here I itemized manpower, utilities, rent, goods, and then approximate monthly gross income from research. And then those will be converted to annual again. And I perform the same analysis for a coffee shop, assuming 50 square meters with 30 to 40 seats in a prime location. And for this coffee shop, since we have a rather large budget of 10 million, the space can be bought. can be bought. You consider that option as well. And then here are the corresponding costs for initial capital. And here are the monthly breakdown of costs and assumption for monthly gross income. So I put it at the inflation of 3.4%, which is, I think, the current for the
Okay.
Philippines based last week's discussion. And then at the bottom here is the summary of all the values. So the cells in green means a good, better option since for the coffee shop, there are the most cells in green, so it might be the best one to consider
Mm.
based on the parameters.
Mm. Yeah. So I think there are a lot of assumption that you
Mm-hmm.
make. Okay, so that is very nice that you can dare to assume. Okay,
Mm-hmm.
uh, of course, some of your assumption may not be correct, but that's
Yes.
okay. Okay, so over time, uh, you can uh, improve your computation based on the new assumption that you can find on the field.
Mm-hmm.
Okay. And based on this table at the bottom, I think the last part, right? The coffee shop, it seems like the best option. Yeah. Even though the IRR is only 70, this is hardly a good business, but um, you can try to find better if you can find. Okay, so
Yes.
for a real business, I think probably about 30%. Okay, because the bank loan already how much? 15, right? Is that correct? The bank loan last week you said about
Yes, sir.
yeah,
14.4.
yeah, yeah. So about 15. So if you get only 17%, I think barely you make a real profit nah, and very sensitive to many conditions. Okay, so but this is a search. Okay, so you can always use the same technique, yeah, to search better business idea probably or investment idea. Okay, very good. Okay, who else want to present uh, your assignment? Yeah, Angelo, go ahead.
Let me share my screen. Can you see my screen po?
Yeah, yeah. Okay. Oh, this is very nice. Okay.
So, in my assumptions, uh, this one's a 6-bedroom apartment with a lot area of 150 square meters, and each unit will be 23 square meters. So, total of 6 units. And then for the construction cost, I leave it to the civil engineers,
Okay.
to the other
Okay.
civil engineers, with a lump sum of uh 3.75 million, 3.75
Oh,
million.
okay.
For the land procurement, I check the zonal value
Mm-hmm.
in Pasay City, Metro Manila, and it's 35,000 per square meter.
Mm-hmm.
So times 150, so it's 5.25 million. And then I also estimated the fence and gate drawings, permit and taxes, furnitures, and the annual taxes or other operation and maintenance costs. I assumed 1% total of the total expense or cost. And then I estimated a relatively low uh, rent of 20,000 per month and then multiplied by 12 and then multiplied by 6 for a
Well,
total of 6 units.
okay.
And then I projected the cost and benefits using the
Mm-hmm.
formula, assuming the interest rate would be 12%, and then graph the cost and benefits. So for the first year, the uh, cost would be the permits, the
Construction.
construction cost, 50% of the construction cost, fence and gate drawings, and the land procurement. And then on the second year, the rest of the construction cost. And then so on for the operation and maintenance cost. Then every year I'll receive 1.44 million and then project it to the next years. Then in my graph, uh, in order to visualize it, uh, you can see here that you are gaining more than uh, than you than you spent. So that's what I want to see from this graph. And then on my second business, a food cart, this one's a show my bike cart. So I recently had the opportunity to start show my bike cart and
Mm.
applied the same costings. So assuming I have 10 units or 10 bike carts, we have here the bike cart cost, the freezer, equipments, labor, electricity, ingredients, and utensils, the parking and marketing, and other annual costs. Each unit would be 1 million for the whole year. And then assuming I sell 300 pieces a day with a net profit per piece of 2 pesos times 10 units, I'll be gaining 1.7 million a year. So
Okay, so there is
this one's the projection. So later I'll discuss the summary.
okay.
And then,
Angelo,
yes
I
po,
just want to check, yeah.
yes po,
Uh, is your computation correct or not? I'm
yes
not
po,
sure
okay po.
because you're supposed to divide rather than multiply, I think.
Divide the,
Okay, can I go back to the 6B apartment, right? There in E6, right? So you multiply here by the factor. It's supposed to be divide, no? Because you know the future value and then you want to get the present value. That's why the benefit is getting higher, even
mm,
though
mm,
your value in C is the same constant. That is
mm,
strange. Huh?
mm. All right
This one
po.
should be divide, not multiplies. C6 divided by.
I'll fix it po next.
Yes, this one
Okay.
should be divided. No?
Yes.
Okay. With that, the graph should be going down, not going up.
Oh, I see.
Okay. Remember, any future value, if you have a constant here, the graph should be going down, not going up. Okay. So anyway, no problem. So you can just fix that.
Sige pa po.
Okay. Thank you.
Thank you.
Anyone else? Remember, yeah, when you do that, okay, the year that you put there is actually the future value, and then everything you put back to the present value. Okay, that's why you define. Nah? Okay. Yeah, Aaron, please.
So for this assignment, I have three investment. So the first one is a condo to be rented later on. So I assume that the actual cost of the condo is about 3 million pesos of capital investment and an annual maintenance cost of about 20,000 pesos, increasing by about 5% per year. And then for the benefits, I assume that I would be getting 360,000 pesos per year or 30,000 pesos per month, increasing by 5% every year as well. And I have a assume an investment period of 15 years. And for the discount rate, I assume just a 10% discount rate. So for the
Discount rate
cost,
means
that's the interest rate, sir.
okay.
So for the cost, so I laid it down here, and then I divide it by the 1 plus 0.1 raised to the actual number, the year period. So this is the present value of the cost.
Okay.
And then the sum
What
of
does the 20,000 mean?
sir, that's the 20,000 pesos annual maintenance cost.
Very cheap.
Yes, I just assume a very cheap number since it's just a condo to be rented. And then for the net present value of the cost, it's just the sum of all the present value of cost plus the 3 million pesos.
Okay.
And then for the benefits, I assume a 360,000 per year, increasing by 5% every year.
30,000
360,000 pesos per year or
per
30,000.
month is how much?
30,000.
Is there anyone rent a condominium of 3 million pesos for 30,000?
If it's I think if it's like in a very high if it's like in a central business district, that's possible.
Okay.
Okay.
Okay. So again, the same. It's basically the assumption. Okay, that probably need to be revised, but it's okay. The computation is correct. So okay.
Great, sir.
Next.
And then I computed for the present value of the benefits using the same calculation and the same
Correct.
discount
Divide.
rate. Okay.
Yeah, this computation is correct. Yeah, divide,
Great.
not multiply. Okay.
And then the NPV is around 3,616,000 pesos. So the total NPV is just the difference between the NPV of the benefits and the NPV of the costs. So it's the difference between the two numbers. And then the benefit cost ratio is 1.13, which is the NPV benefits divided by NPV costs.
Okay.
For the IRR, what I did was I used the IRR formula for the difference between the actual benefits and the cost.
The present values, right?
Not yet, sir, because what I did was to check if this one is correct. What I did was this actual value of cost and benefits were discounted using the IRR of 12.07%. And then the same thing for the benefits. So the NPV benefits is equal to the NPV of the cost.
And then
And then that means I think it should mean that the discount, the IRR of 12.07% is correct. Yeah.
Okay, just to check.
Yes, just to check, because I think if I'm not, how I understood it, sir, is that your IRR is the discount rate that would make your NPV
Per
benefits
definition.
equal,
Yeah, that's
yeah,
correct.
to NPV
Okay.
cost.
If you get directly from the NPV, from the benefit minus the cost, okay, and then you sum all of that in the row,
Mhm.
and then you compute, I think it should get the same value.
Okay, sir. Okay.
Okay,
And then
and then
for the second investment, it's a restaurant business. I assume an capital investment of 5 million pesos with an annual operations and maintenance cost of about 450,000 pesos, increasing by 5% per year. For the benefits, I assume 1 million pesos per year, also increasing by 5% per year. For the investment period, I also assume it's 15 years with a discount rate of 10%. So I basically did the exact calculation as the previous investment. I get the present value of the costs and benefits, and then the result is the NPV of cost is 9.5 million pesos, and NPV of benefits is around 10 million pesos. So the total NPV is around 525,000. And then the benefits cost ratio, the NPV benefits divided by the NPV cost is 1.06. For the IRR, it's my computation is around 11.58%.
okay,
So I also checked if the IRR is correct. So
okay,
based on my computation, it's correct
Yep.
since these two variable figures are
the
equal.
same. Yep.
Okay. And then the last investment is a bike shop.
Oh,
So the
this is
cost
nice.
I assume is
29%. The
yeah,
IRR is 29%.
yes. So I assume a cost of around 2 million pesos a capital investment. So the remaining money out of the 10 million pesos. And then an annual operations and maintenance cost of about 240,000 pesos, increasing by 5% per year. For the benefits, I assume 750,000 pesos per year, also increasing by 5% per year. Investment period of 15 years and discount rate or interest rate of 10%.
Okay.
So I actually did it just the same calculation.
Yep.
So for my total NPV, it's 3 million pesos. For benefit cost ratio, it's 1.71. And then
Yep.
for IRR, it's 29.39%. So
Okay.
checking it also, it's
Yeah.
also correct.
Right. So thank you. This is very nice. So my point is simple. Can you see that you repeat the same thing again and again, right? All of
Yes.
you, right? Okay. So in that case, we can standardize. We can make a template. Okay. So in my case, I usually create a template for this purpose, and then all we need to do is just fill up the values, no, the table. Okay. Okay, I will find the table later so that you can also see. Yeah, template. Okay. So I have template of the. Can you see?
Yes, bro.
So oh, this one is one cycle. So you can fill up with any number. Can you see the template?
Yes po.
Okay. So and then I just limit. Oh, okay. So let me go to one cycle. So I just limit to 10 years. And then we can compute. So the usual performance. Okay. All the income that we need, okay, the benefit, Of course, after that, so this is the cost and then the PV, right? The present value. So remember the value here is T5, not the reply. Okay. And then from all of this, the net of the PV, then you can calculate the IRR and then the PCR and PV and PPAC value. Okay. If you have if your business, because this is like a property business, so we want to cycle. Okay, so if you have a several cycle, you can also make it. Okay, by the end of what is the cycle? So that means every, say in here, for example, every 4 to 5 years, we need to have additional cost again. Okay, and then you can compute the whole points. Okay, up to, for example, how many cycles? 3 cycles. I think public investment is on also the same. So you can create your own template. Okay. Okay, thank you. Who else want to show your work? Yes. Okay. Let's see. Oh, sorry, sorry. You are not co-host yet. Okay. Um, go ahead. Let's see. Yeah.
Something, cost of acquisition is same as the present property value, and the monthly income rate will increase at 1.5% every year. And then for the flip investment, same.
We cannot hear your voice. Well, can you hear your voice?
Can you hear me now? Am I hello?
Yeah. Okay.
Yeah, okay. So, and then, distribute same amount of 10 million pesos per investment, just to identify investment will create like so from both reasons, I think I'm shopping first, but I'm just going to present this one, the result. So the rental income with the rate of 1.5%, and then the property value appreciating 7% every year. So the total getting the total benefit and then the cash flow will give you an NPV of 5 billion, DCR of 2.25, and a 22.62% EIRR for internal rate of return. And then the doubling time will require to do the investment of 16. For the crypto,
Negative.
it's 9.58 billion. For the business, it's 2.58 for the dollar. Or that is
Hmm. Okay, so all still below 30%, eh? Okay. Okay. So, thank you. So, of course, when you want to do investment, okay, so you want to try to create the value. Okay, probably one of the most important criteria is the IRR. Okay, so why? PCR, of course, must be larger than 1. Okay, that is clear. So that it will become visible, right? NPV should be positive so that become visible. Visible does not mean you will accept. That is only visibility. Okay. Once you make that, okay, then uh, you want to check, okay, which one is good or not. So IRR, I think one of the best computation. Why? Because now you can compare not only whether it is good or not, okay, but you can compare with inflation, you can compare with the bank rate, right? So if say you borrow from the bank, say 15%, and then the inflation itself is already like 3-4%. So you're supposed to get like 17% is lost just because of this cost, isn't it? Now, if your business is only 20%, so practically you get only 3% benefit. Is that correct? So that's why 20% is barely minimum. Yeah, I know investment and business is not easy, but at the same time, this is searching. Okay, so and then you need to improve the performance. So, is there anyone else want to present your assignment? Okay, I'll give you an example. Okay, where we can get two example. One is the condominium. Okay, can you see my slide? My Excel. So this is real condominium in Katipunan area. So this is the price that I bought last time. Okay, and monthly rent there is barely can get this 25 is really very high. Okay, around that area is I think about 17 to 25 maximum this one. And this is the condo dues. Okay, there is a tax, the income tax, and then the utility around 5,000. There is another yearly maintenance, and then salvage values. This is something very important. Okay, after I computed, so the actual income from condo unit is not really profitable. Okay, so usually the rent is about 5% of the price, but the condo unit usually the developer of the condo already eat all the profit, no? So when you want to rent it out, practically you don't get anything out of that. So the only one that make it profitable is when you sell the condo, assuming that the condo price will increase over time. So I put here the conclusion. So the actual income is not from the rent, but from the increase of the price that condo unit over time. So the salvage value is the most important part here. When you sell it, okay, after you rent, after you pay everything, and then you sell, that is the part that make you win. So IRR only 1.9. Okay, payback period is this one is based on the divided by this is the from the initial capital and NPV. So I put it divided by NPV divided by the initial capital. Okay, so about 6 years. Again, this table is standard, right? So you can create on your own. This rest of input and assumption, this is the one that different from it in investment because there are a lot of assumption that you need to put there. Okay, so this is again based on the real numbers there. Even though if I put very high price, 25,000, cannot get the actual good result. Yeah, but okay, surprisingly, I got very good result when we computed the taxi. Okay, so let's close this one and close. Okay, can you see? Okay, so this analysis based on the real price also. Okay, so you only need 1 million. So the taxi is one car. Okay, 700,000 pesos. Okay, and then this is I forgot what is the brand at that time. Registration is around 200,000. Maintenance around 10,000 per month. Okay, so and then you ask the driver. This is where the you can ask. Okay, this is the real price. So when you rent taxi, you ask how much is the boundary. So the taxi driver need to pay the owner of the taxi 2,500 pesos per day. Okay, so that they can earn around almost the same. So they earn per day is like 5,000. So 2,500 is for the owner. Okay, let's assume 25 days in a month, and then say you pay the office cost, say 2,500. This is the minimum wage, right? In Metro Manila, and the tax is 20%. Every year you need to pay like 20,000 license. Let's assume five percent, and then all these in yellow are numbers. No? So these are the assumptions that we put, and the increase of price is about 5% per year. And from there, you can see the IRR is 86%. No? So within less than 2 years, you can get back one taxi. This is amazing. Yeah. Okay, you can check on your own, okay, all these numbers and whether this is true or not. Yeah. So this is really profitable. So say if you after 2 years you get two taxis, then this one the capital is getting higher, and of course this one the IRR is wow. Okay. Say if you have some of these taxi companies, they have like 30 units. So this is very, very big. Yeah. Even we cannot even compute correctly. Anyway. Okay, so is there any question? Can you make it for those who did not make the assignment? Can you make it on your own also? Yeah. For those who already submitted and get the grade, if you want to submit again, that's fine. If not, it's fine. Okay, so I extended to next week. Okay. Okay. Is there any feedback question about this investment? Okay, so if not, let's go to the previous one. Where were we? So last week we discussed about the financial analysis, right? So you can get the period, how long you need to wait for certain future, and if you know the future, you know the present value, okay? And then you know the K is the interest rate, then you can calculate the N, okay? N is the number of years, number of months, okay? And say if you have 1,000 pesos today, right? And then you put that into a cooperative to give you dividend of 10% per year. So how long should you wait until you reach 2,000? So in that case, you can get around 7 years. Yeah? So this is what we call as doubling time. Okay? So the approximate is 72 divided that percentage. Okay? So it's the same, right? So 72 divided by 10, so you get 7.2 years. Okay? So by knowing, again, the actual number is not that important, but you need to compare with other investment. Okay. Yeah. So I investigate Rule 72. Okay. How many percent of the approximate error will happen for the interest rate? Say I put from 1 to 35. Yeah? And what interest rate of the Rule 72 will have more than, say, 0.5% absolute error. Okay? So here is the absolute error more than 0.5%. Okay? So that means if your value is larger than certain K, yeah, so more than 3, I think is quite accurate. Okay. Now, next is about how if your interest rate is not computed at the same period. Okay, so for example, monthly or quarterly. So the formula is just simple. So your K is now depending on the R and M. M in here is the actual monthly, for example. Okay, so say we have now become two type of interest. One is called nominal interest. That is what is the financial institution say. For example, if you have 3% compound each quarter, okay, the bank will say 3% times 4, which is 12%, right? Okay. The effective interest is the actual interest rate. Okay. So again, if we say 3% quarterly, okay, the actual interest rate is actually not 12%, but 12.55 based on this formula. Can you see? Okay. The same thing. For example, you said the bank will say 1% compound interest each month. Okay. In that case, they will still say 12%. Okay. But if you calculate the actual interest is 12.68 based on this formula. So again, 0.12 divided by 12. Nah? The 12 is the number of months, and then M in here is 12 again, because this is monthly. Okay, so when you have your, say if you put daily, so then you need to compute, okay, say divided by 364 or 360 usually. Okay. So you can compute at different period. Okay. Next is annuity. Annuity in here is assuming you have a regular payment or regular income. Yeah? Payment is the cost or income. Nah? Suppose you take some loan to the bank or money lender to the project, say, or to buy the car or house. Okay? You receive the a loan now, then you need to pay the principal plus the interest, right? So starting for next year, for example, what is the annuity? Okay. So then this is the formula. Okay. You just get the A is the annuity, B is the present time, okay, and then put this formula inside. Okay. Again, if you need to select, okay, between 600 today and 100 per year for 7 years, assuming 5% interest rate, which choice has higher value? Can you compute practice? So every year 100 for 7 years, no? Okay. Or today is 600. Anyone? Anyone want to share screen? So you have two options. Okay. Receive $600 today, around 30 pesos, right? 30,000 pesos. Okay. And then, or you receive 100, so around 5,000 pesos per year for 7 years. Which one is better? Yes, Aaron, go. You can share your screen.
Okay,
Okay,
sir,
right.
what I did was for 7 years, I just
Okay,
get the present value of the $100
okay,
per year. So it's net present value for 7 years, assuming an interest rate of 5% is about 578.64. So that's the
okay,
option two. And then the
correct,
option one is the 600. So my conclusion is option one has higher value.
correct, correct. So now, Aaron, can you compute directly using that formula a while ago?
Okay, hold on, sir. The
Okay, so
formula,
formula is A is 100, right?
right. A
Okay,
is equal to 100.
right. And then now you want to get P.
Okay, so
Okay,
that's K
the
is
K is that one, the 5%, K.
5%
Yes,
divided by 1 minus
divided 1
divided
minus 1 divided again by 1 plus again that 5%. Okay,
raised to 7.
correct.
Am I correct?
Okay, Okay, and then that 100 divided by that factor. Okay, in separate cell, maybe.
Okay.
Okay,
It will be
P,
100. Ah,
yeah, that one you have 100 already, right? So
100
now
divided by.
by that factor. Is
Okay,
that the
so
same? So exactly the same, right?
yes, sir.
Yes.
578.64.
Right. Very good. So, and actually in Excel, there is already a formula for that. Okay, so again, now can you put 100 as A so that you can use 100?
Okay, 100.
Just A is 100. Okay, so now you can also put the N is 7, right?
This is A, this is N.
Okay. So you want to get the present value, okay, based on the annuity. So in that case, is that correct? Okay, now you want to get P, right? So equal minus PV
PV, sir, or
minus
N?
PV.
Mine, PV. The
Okay,
rate,
that one. So the rate and then the N, okay, and then A. Oh, you get exactly the same. Okay, so instead of, if you don't remember the formula, you can use the Excel. Okay, of course, the tree method is the same thing. Okay, exactly the same formula, but you see, the first part that Aaron used is actually uh, describing year by year. Okay, this is very clear. Okay, but if you want another way, okay, so maybe faster is to use the formula or to use function directly in Excel. Okay, okay. Thank you, Aaron. Thank you.
thank you, sir.
Yes, very good. So anyone get the same answer, right? Okay, so very good. So how about like this? If some insurance company will ask you to pay every year, okay, certain amount of money, right? And then after that, in the future, okay, the insurance will promise to give you some big amount of money. So how are you going to calculate that? Whether the insurance is telling truth or not? Okay. Okay. So in that case, you want to compute, okay, the future value based on annuity, isn't it? Can you see my slide? So again, these are the formula. Okay. If you don't want to know the formula, you can just use the Excel function. You can, or you want more detail, you use similar to Aaron a while ago. Okay, every year you put the same value A, right? And then you put them into present value and then put them back to future value. More complex computation, you will get the same answer anyway. Okay, they are equivalent. Okay, so okay, let's practice. Okay, this one, everyone. Okay, starting from this year. Okay, you want to set aside some money every year for your own retirement. Okay, let's assume very big saving interest rate, which is 7.5%. Okay, but the inflation rate is actually 4.5%. That means your actual saving rate is only 30%. Okay, so and then you think that you want to get at least 5 million retirement in 30 years from now. So the question is simple: how much you should save each year for your retirement? Can you show your computation? Okay, once you finish your computation, please share your screen. So I will wait for. Anyone want to show your computation? Mayan.
Hello po, I'll share my screen po.
Oh, go ahead.
Can you see my screen, sir?
Mm,
Apo.
yes.
Sir, I just use here the given formula for the future of annuity. So the interest is 3%.
3%.
Yes. Then the future amount is the
5
after
million.
years is the 5 million. Then the letter N is 30 years. So using the formula, so 5
Easy.
million over, so as shown in the
Okay.
screen, the answer is um
100.
100,035 pesos. So we
Yeah.
have to save approximately 8,500 per month.
Per month. Yep.
Yes.
Very good.
Thank you
Very
po.
good. Yeah.
Thank you.
Thank you, ma'am. Okay. So to get 5 million in 30 years, okay, at of course, this is very high interest rate in saving. That means probably you need to put your money in mutual funds, okay, or stock market to get that value. Okay. Then you can get approximately 3% passive income. Okay. Then if your target is 5 million pesos, then that is the way to save. Okay, 8,500. Okay. Is there any comment? Question? No. Okay. Okay. So now I want you to do something else, which is more complex. Is that okay? This is a while ago. I usually use this table. Okay. Given these three values, and you want to find certain values. Okay, and these are the formula, and the last column is the Excel function. Okay. And these are two slides. Okay. Number 1 and 2 here represent whether the annuity is computed in the beginning of the year or the end of the year. Yeah. Oh, and you may wonder why I put negative value here, because Excel will automatically compute that as low. Yeah. So in that case, negative. So to make it positive, so we make things positive. Okay. So try to make this practice now. Okay. This is more challenging. Okay. So if you cannot make it, so I will put this into assignment. If you make it, the assignment will be different. Okay, so make a spreadsheet to compute your retirement plan. So and one is 20 years period of saving. Say monthly is around 5,000. So this is like annuity. Okay. And then second, you also invest your saving in stock and bond that yield around 10% per year. Okay. So when you retire, okay, you will withdraw every month, right? X amount. Okay. And then every year, you also need to increase your X amount a while ago to cover 5% inflation, isn't it? Okay. And then the investment on the stock will still yield, say, assuming the same amount of return. Now, this is what you need to find out. How much is the total saving before you retire? And then how much is X that can you withdraw per month? If your monthly saving is 5,000, and then the last question is the most important. How many years will your retirement plan actually sustain? Okay. Imagine that you are, what do you call that? What is the, oh, is that GSIS in the Philippines? Is that GSIS that you need to put your retirement plan for the government? Okay, so imagine that you are the manager of GSIS. So I put the answer there in spreadsheet, but you need to make it on your own. So the currency is pesos, right? And estimate inflation the year, and then saving 20 years, and then the return per annum is 10%. Okay, and then so total saving retirement, and the one in yellow are the one that you need to input. Okay, so how many years you can compute? Okay? Can expect it to sustain after you retire in 20 years. Okay. So maybe not my computation not correct, so you can check on your. Okay, so this is the saving. In the beginning, you need to compute your own saving, say up to 20 years, right? After that, you are using your money. Right? After you retire, you are using that saving. That means reduce, reduce, reduce. Okay. Okay, right. I think this is an interesting problem, isn't it? So usually people retire at what age in the Philippines?
60,
65.
usually 60 or 65.
Okay. So, and how long usually after retire they can still survive?
Years.
How about 40 years is enough? Of course, different each person, but based on the most probable.
The life expectancy is 72 years old
Hmm?
in the Philippines.
How long?
The life expectancy is
Is
72 years old.
72 only?
Yes, yes, prof.
Oh,
I searched in Google.
okay. Um, okay. When I was in Japan, so uh, they call it senior citizen if you are already 76 years old. 75 is still young. So senior citizens start from 76. Yeah, the society is getting older there. So we want to know, okay, how much should you save per month until you retire, so that you can sustain, say, 40 years. Or 40 years after 75, that is 105. I think that's enough. Nah? So, uh, so first you could do the calculation, saving, and then using the money of the retirement. Okay, and then uh, you can use either sulfur or gulsik to set the value to zero after 40 years. Okay, how much is the saving? So searching for the saving, okay, by setting the objective, the accumulation after 40 years becomes zero. Once you finish, you can share your screen, okay? Retirement computation. So the one in yellow, can you see? The one in yellow are all numbers. Okay, so you can put any value, say 5,000, right? Okay, and then you compute, okay, up to 20 years. So say if you have Okay, so how much? This is the input. Okay, first you put the input first. This one is my computation for US dollar. So for month, I think is enough, right? $5,000. Okay, if pesos, maybe not enough, but $5,000 is enough. Okay, so so how much do you need per month? Okay, so 5,000, same, just numbers, no? And then 3% per year, estimate of the rate, and then the number of year and of the saving up until you start retire. So you can put 20 while go. That's right. Yeah, 20 years. So let's put that 20 years. This one is 20 years. Right. And this one is 10%. Is that correct?
Yes, Prof. 10%.
This. What is this? This one is put here. Okay, so 10% and so the value is up to you to set. So 10%, 20%, 5%. This one is 5%. So this one is 5,000, right? The output. So this, now I want to know how much is this you need to put in the beginning of retirement. So say if I put here 16,000, how much? 956 per month, then okay, so at the end of 40 years, I will still get like 2,000. Okay, but if I put this only say 5,000, okay, then oh, why my accumulation is getting bigger? Because so here I put here is 5,000 multiplied by 12. Okay, and then that is correct, right? 5,000 here multiplied by 12. Okay, and then this is the same for 20 years. So the accumulation, okay, so initially like this, and then you have interest rate, right? So the interest rate come from this 10% per year, and the accumulation. Is that correct? So if you have and then the accumulation here is okay, the total cost accumulation plus the interest, and then now from that, okay, you accumulation mean the saving, the new saving from the second year plus the accumulation of last year. Okay, this is assume that you already get interest by the end of the year of 6,000. Okay, and then we compute it all okay, up to 20 years. And then at the end of this 20 years, you get the total is 3,780. Yeah. Okay. That one I put here. Okay, just copy. Right. Or it's exactly the same anyway. So, and then from there, you eat up now. Now you are eating. This is the one that you eat. Say you also eat at the same amount, say 5,000. Okay, and then you accumulate, right? So, but now because you are eating your money initially, this one 73781. Okay. Then you are eating your money, but you still gain interest at the same time. So the interest still remain the same, say five. This one is 10%. Okay. And after that, you keep eating, but you remember because you have inflation of 5%. So the one that you eat is also increased. Okay. So then we compute it down. So how long it will actually reduce or so if of course when you accumulate at 10%, inflation is only 5%. So and then you are only eating 5,000. Uh, your money never go down. Your money actually go up, right? But now the question is, if I want to finish it up to 40 years, okay, then I will use either gold sick or I use sulfur. Okay, so that at 40 years, yeah, I want to put this number instead of going up, I want to pick it 0. So let's do that. Okay, we want to find how much is this value. So this one is J4. So we go to goal sick, right? What if analysis, okay, goal sick here. So we want to set, okay, this value at the end of 40 years to 0 by changing cell. Which one you want to change? This one, yeah. So how much I can spend, okay, after I retire, right? Oh, it will compute. Okay. Oh, that one. You get now 16,900. Okay. To answer your question, Katrina, this is how I got that value a while ago.
Yes, Prof. But the process I need to study.
Which one? Which one that you are still confused? So you tell me.
So, sir, initially,
Okay.
you set it the same as 5,000 monthly.
Well, say for example, if you set 5,000, okay, your accumulation here will go up, not going down, because your interest rate is 10%. Okay. So interest rate is higher than inflation. Of course, it will go up. Okay. So by putting these numbers, okay, all in yellows are the one that you input. Okay. Then you can start to change if you need to change the assumption. So initially, of course, 5,000. So that means in the beginning of retirement, okay, how much do you actually need? Okay, 5,000 a month. Okay. You don't like, you can increase that value. Okay. Now, if I want to finish my money by 40 years, how much is this? Okay. Then you use Colsic. Or you can use also sulfur. Right. So in theta, you can have sulfur here. Okay, there. You set the value of 40 years to 0, okay, by changing the saving, and then you solve. Yeah. And then you find the solution. Yeah. Oh. Okay, so if you spend 5,000 a month, then you only need to save like 1,400 per month. Can you make this spreadsheet so that at least you have some idea how to do? My question to you is this kind of computation important for you or not, personally? Right? Of course, you also want to know, right? So if you save for your, eventually you will retire, isn't it? Right? So at certain day of your age, okay, you will not be able to work. So in that case, you need to have saving for that. Okay, whether you are using government or you are using your own, so you need to be able to compute this, right? So if you are using government or some financial institution like insurance to get your retirement, so in that case, you need to check whether what they compute is also correct. I think this is rather important practice. Do you want to do it now? Do you want to do it now, or you want to put this as assignment?
For me, I think better as homework.
Okay,
Or,
okay,
I
okay,
don't know about the others.
okay. So that you can we can make more progress in the class, right? Yes. Thank you. So I will post this assignment later. Yeah. Okay. So let's go to the. So I will. So, so the next practice is actually about okay, this one. Okay, again, now we have some probability. Okay, actually, if you can do that a while ago in the class, so this should be the assignment. Okay, so suppose you have 100,000 pesos. If you put the bank, okay, you get, say, for example, 3% interest. Yeah? No risk. Okay, but if you invest your money in the stock market, so, or of venture business, so say you can get 7% of interest on average based on certain probability. Okay, say for example 50%. But there is also possibility your risk to gain is only 5%, okay, by probability of 10%, or your income probably only 3% by probability of 20%, or 1% earning with probability of 10%, or you might lose your money all 100,000, which quite big probability, 10%. So and then imagine that you have 10 years investment period. Then the question is simple: will you put your money in the bank? Okay, no risk. Okay, 3%, or you put your money in this kind of stock market or venture business. So a while ago, everything is deterministic, but in this assignment, there is a notion of probability in info. Okay, of course, you will get the EMV, expected monetary value. It is the gain multiplied by the probability, and then you get the average. Okay, so whether you can get correctly. So this is there is no answer here, so you need to really do this on your own. Okay, so yeah, I think this is the end of this slide. Okay, the rest is only derivation, how to get the n while go and the gain. So is there any question so far for this lesson of financial analysis? So really everything clear? Or if you have some doubt, you can ask, or we can discuss in the class. I think many of you already learned this, okay, in probably in other courses. That's why you are very expert already in the previous assignment. Okay, so let's move on then. Okay, if you go to Moodle, yeah, I have a slide on, no, it's a text on financial education. So you can just read on your own, that one, okay? And then let's discuss the next one, which is example of economic analysis. Okay. So I don't have slide on this, but the text is there. Okay. Oh, I think I have the slide on this one. Okay. So space, 4 point space. Okay, I think I have the slide. Economic analysis. Okay, so let me show you. This is the example. Yeah, this is the slide. Can you see my slide? Introduction to economic analysis.
Yes.
So, yes. So this is just a simple example that we want to do economic evaluation, okay, on, of course, benefit cost analysis. You are the expert on that. Okay, using NPV, PCR, and IRR again. Okay, but we want to understand more detail now, okay, about the component of benefit and cost. Okay, and then this is based on my real project in Japan. Yeah, so say a city local government want to introduce a new bus system, okay, for elderly people. Okay, now as a consultant, okay, you are hired to perform the economic feasibility of this new system. Okay, so say you did a simple survey about the bus dealer, bus company, and then you also did a survey on the elderly people, your target market. Okay, and then you get certain information about the existing bus system, and then the preference on the bus user, right? And of course, the government set some constraint. Okay, so the local government insists that the maximum fare should only be $1 per trip for flat fare, or okay, if you use a zonal system, so maximum of 10 cents per kilometer. Okay, with a zone boundary every 2 kilometers of travel distance. So this is constraint set by the government. Okay. Now these are the data that you have collected. So you have the two possible type, which is minifan or minibus. Okay, so this is the purchasing price. Minibus is of course bigger, but it can take longer and more passenger, 20 passenger. And then the operating speed is the same, but the minivan can reach 12 kilometer per liter. Well, minibus, because they are bigger, only 8 kilometer per liter. I think this is quite good. And then the engine oil, you need to replace every 5,000 kilometer or 2,000 kilometer. These are the number of tire again, and then these are the price of the tire, okay, in US dollar again. And then you need to replace the tire every this kilometer. And this is the salvage value, meaning after you say after usage year, say 3 years, you can still get 10% of the purchasing price. In if minibus, you only get 5%. Okay, and driver salary is this price. Okay, this is normal price. In other countries, probably this is too much in the Philippines, I understand, but please use this number. Okay. Okay, so this is the other information. So this is the gasoline price. Okay, and this is all in engine oil price, again in US dollar. And this is the number of working days is only 360 days, 350 days per year. Operating hour is 12 per hour per day. And then this is the interest rate that we use. And then reduced time per passenger, okay, is about 3 minutes for boarding and alighting. Remember, this is elderly people. Okay, they are rather slow. And say, let's assume the distance from origin to destination about 5 kilometers. Okay, and then the question is this. Okay, so among these two type of proposed bus, minivan or the minibus, which one is the most feasible? And then the next question is, of course, this is what the local government asking you, how much subsidy, okay, the local government need to provide. Maximum subsidy is only 1,000 per bus. Okay. Based on that, those information above, question is, okay, can you try to solve that problem on your own? Okay. What are the steps to reach the solution and what are the challenges? Okay. Of course, you can set any common sense additional assumption, okay, to make your analysis workable. The Excel file is already there. I'm not sure if I put it in. Oh yeah, I put it also in Moodle, so you can use that. Right. So you can download, okay, the computation so that we can discuss it in class. Okay, so any investment project like this, okay, will have cost and benefit. So the usual cost and benefit, cost, what are the costs in this case? Cost category. Okay, first is purchasing cost, okay, and then what? Operation, okay, and then maintenance, okay, maybe some administrative costs. Okay, so these are the usual costs. Okay. And what are the benefits? Okay. So probably you can get from the subsidy, from the fare. Okay. Okay. So these are the benefits that you can put So of course now later you can put the total cost and total benefit, and then you set back to present value. Okay, and if the total cost is bigger than total benefit, then the system is not feasible. If the total benefit is greater than the total cost, and then we can say that the system is feasible, only feasible. Okay, not chosen. Okay, okay. So these are the costs. While ago, okay, so you need to buy the bus, right? Whether minifund or the bus, so you can buy the bus, and then operating costs. Okay, in this case, you need a driver and gasoline. Okay. In terms of maintenance, for every number of kilometer, you need to replace the engine oil, okay, the tire. Okay. So of course, cleaning also, painting also important. Okay, I don't know if you want to put that. Okay, and then administrative costs include the inspection fee, vehicle tax. Okay, and then you probably need to pay administrative officer as the operator of the system. Okay, and in terms of benefit, you can get three things. Okay. One is the income, okay, from the fare system. That means the fare multiplied by the number of passenger. Okay, and then when you sold the bus after being used, say for example after 10 years or 3 years, okay, you want to purchase new bus. That means the old bus will be sold in an auction. Okay, then you can earn little income. When in case, just in case the system is not feasible, but the local government still want to keep this new bus to run. Okay, of course, because of political reason, they already promised, okay, to the citizen during the campaign, right? So in that case, they will provide a limited amount of subsidy, okay, per year. So you can use the three famous economic indicator, okay, NPV, PCR, and IRR. You already know about this. Okay? So again, don't forget, when you compute NPV, you need to compute all the cost and benefit of any years into present year. Okay, this is the criteria of feasibility. NPV must be positive, right? That means the project benefit is more than the cost. If you use PCR, okay, benefit divided by cost, again, you need to convert everything, yeah, the cost and the benefit into present year, yeah, equivalent basis. PCR must be less than 1, right? And then IRR, you already computed a while ago, yeah. This is by definition, okay, after you put everything into equivalent basis of present year, okay, then you calculate the interest rate so that the benefit equal to the cost. Exactly what Aaron did a while ago. Okay, or you can just compute the IRR. We compare the IRR and then just compare with the bank interest rate. Yeah. In Japan, for many years, the inflation is almost zero. In fact, there is a deflation rather than inflation. The price going down, not going up. This is I'm trying to get the formula. Okay. This is the total cost and the total benefit. Okay, so I put this. And then the one in yellow here is the value that we can input. If you know the driver salary, then you can calculate the total driver cost. Right? If you know the unit tire and the tire price, you can get the total tire cost and so on. Okay, so these are the schematic diagrams on how I compute everything. Okay, otherwise you can get confused with that spreadsheet. Go ahead, you can download the spreadsheet, okay, so that you can check, okay, the computation in the spreadsheet based on this formulation. Okay, so the green here represent the formula. Okay, the yellow represent the constant, okay, and the fair represent the option that you need to change, okay, and then these are the target is total benefit and total cost, right? So we can assume only one bus in one route per operation, and then all costs and all benefit are computed just for 1 year first. After that, you convert them into present value for all the usage years. So there is no increase. Okay, just use our common sense and then check the units. Okay, so the formula I make them based on this common sense. Maybe I'm wrong, so you can correct it, no problem. Okay, so let's compute the cost. Okay, so we compute the total cost and total benefit for 1 year. Okay, and then assume the pricing to be the same for all the usage here, for example, for 5 years. And then we break down. So the operation and the maintenance, okay, into gasoline, engine oil, and tire, and driver. Okay, for administrative costs and simple maintenance, we can just put them into administrative costs. Okay, so cleaning and painting, we gather them together. Okay, so here is the formula that I use in that spreadsheet. Okay, so total gasoline cost equal to total distance multiplied by the gasoline price divided by the unit gasoline price, and these are the units. Check that they are correct. Okay, left hand side and right hand side must be correct. Okay, if they are not the same, so this cost formulation is not correct. Okay, and once you get the total gasoline cost, engine oil, total tire, and driver, and then you can combine all of that, okay, plus the administrative cost, we have called them a total operating cost. Okay, after that, you convert everything to present value. Initial cost is already present value, so I don't need to convert this, right? Only the total operating cost I need to convert. Initial cost is only already in the present year. Next, benefit. Benefit is come from passenger per cycle multiplied by the fare, okay, multiplied by the cycle per day, number of cycle of the bus. How many times they can do, and then we can compute that. So total benefit, okay, is of course total daily benefit multiplied by number of working days, and then you have salvage value and then subsidy, right? So these are the salvage value is in the future, so you need to put it into presence. Okay, so this is the factor to put that into present value. Okay? So subsidy will be given by government if the system is not feasible. Okay, and then they give limit. Okay, maximum subsidy like $1,000 per year. So if the total benefit, okay, that has included maximum subsidy and still not feasible, then the system is not really feasible, then we will scrap that. Okay, so again, yeah, subsidy is optional. So in that case, because we put that into yearly basis, okay, so you put into present time, yeah, by multiplying by the factor. Okay. Okay, this is to convert annuity to the present value. Okay. And then you have bus operation formula. Okay, with this based on the total distance and total daily distance, and then number of cycles. So we just based on the distance, so you will know the number of cycles. Okay, and from there you also know the time per cycle. Okay, how long, how many hours per cycle, because the travel distance is given. Okay, in this case, you need to include also the detail of boarding and alighting of the passenger. Okay. And now, after you compute all of that detail, you can compute this. Okay. Okay, this is in Excel that you downloaded. Did you get this? Okay. So the one in yellow, again, are the numbers that we input. Okay. I need to include a load factor here. Okay. And this is the result. Okay. The one in blue here, the result, computation, and the final result is in orange. Okay. Of course, they are all feasible, even though we have no subsidy. Okay. Subsidy is 0. Is that correct? Oh, subsidy I put 0 in the computation. Their NPV is positive, PCR larger than 1, IRR is this value. Minibus have a larger IRR, also larger NPV and larger PCR. So in that case, the option is clear, okay, with this minibus. Okay. After that, you need to compute the fare. Okay, it's not there, so you need to compute the fare. Okay, and the fare is constant per passenger. Okay, per trip, not per cycle. So then passenger will pay for one ride. So maximum fare is $1. Okay, or you can use zonal fare. Can do on your own. So then the question is, which fare system should be done there? Okay, and then how much, how sensitive, okay, this externalities, for example, like the against the interest rate change or against the gasoline price change. Okay? And then how sensitive it is against the fluctuation of the demand. In this case, load factor. Okay? If you look at the Excel. Okay. So this is the computation. Okay. And in here, I give example of the sensitivity analysis in Excel. Do you know how to do sensitivity analysis in Excel? No? Okay, wait, I will show you in a moment. Okay, so this is the load factor that we input. Okay, and then this is the current value. You can see here the current value here. The load factor is 0.8 and 0.7. Okay, and then you can get this value. Okay, and you get the result here. Okay. What is the meaning of this result? You can see if the demand is rather low, so only 0.7, the load factor, okay. The number of passengers in one trip. Yeah. So compared to the capacity of the bus, that is the meaning of load factor. So if the demand is rather low, okay, the minifan negative. No? The IRR is negative, the PCR also NPV is negative. Okay, but a minibus, even if half, then negative, but 0.6 is already okay. Okay, so quite good. Okay, so this is the importance of sensitivity analysis. Okay, so that you can see okay the impact of one factor toward the whole system. Okay, so now let me demonstrate to you okay, how to do this sensitivity analysis in Excel. Okay, Okay, so can you see my Excel? Okay, so you go to this bus, and then yeah, just go to oh, because this is protected view. Sorry. Let me get the. You need to enable. After I downloaded, bus sensitivity, right? Okay, let me share again. Okay, so it said here, be careful, file from internet content virus, but this is my own file anyway. So I will enable editing. Okay. Otherwise, it become a protected view, so you cannot edit. With enable editing, you can edit compatibility mode because this is in the old Excel. Okay, so with that, now you can try on your own. Okay, say I will do what is that? Okay, data. Okay, in data tab, okay, you go to what if analysis, and then go to scenario manager. There. Okay, so you add. Okay, you add this scenario. Okay, for example, I want to add ne. So this is I already add 0.5, 0.6, right? 0.7 and so on. So when you add this, okay, for example, I add 0.5. Can you see here? And then I can click show. Can you notice B load factor here? B26. So there, can you see? Can you see the change? In B26 here, now becomes 0.5. Okay. If I change this load factor to 0.6, again, now B load factor here, change become 0.6. Okay. When you edit, okay, you will put load factor LF is 0.6 by changing what? Of course, the B, okay, 26 and C 26. Okay, I made this a long time ago, 2005. Okay, so okay, can you try on your own? Okay, and then once you click OK, you change the value. Okay, so in this case, I already make 0.6, so no need to change. So let's add now one more. LF equal 1.3. Okay, so again the same, changing file, and then you will ask, no? So in here you change into the value is 1.3, and here is also 1.3. Okay, and when you click this OK, now you have a new one here, 1.3. You can show, there it become 1.3 there, and after that you can summarize, now summarize. Okay, so you put scenario summary and click OK. There you get now 1.3 there. Of course, initially you will have only cell name. Okay, then you just change here. So change the name. Okay, so a while ago I already changed the name, so now become Minifan, NPV, VCR, and IR. And of course you can format it, become if negative you can put okay, different color so that easier to read only. Okay, can you try? Maybe you can try to do sensitivity analysis or scenario in Excel. And then you can share your screen. You see, you already have that. Okay. Say what happened if your interest rate change? in that Excel, what will happen if your interest rate change. Oh, the interest rate is 3% there initially. Okay, so B16 and C16. Okay, what happens if it change become 1%, 2%, 3%, 4%, 5%? You can make it. Yeah. Go to data and then what if analysis, scenario manager. Okay, anyone want to share screen? Okay. When you share your screen and you ask question, discussion, so don't forget to claim in your recitation, okay, in Moodle. So today you learn goal seek, okay, and scenario analysis, okay. After this, we will learn data table, okay, in Excel later. Anyone want to? It's okay. You can just share your screen. If you are not sure, I can help you. Okay. If you're not confident, no problem. I can help you, and then the others can see, so that I will know what is the difficulty. Anyone? Yes. Okay, Catherine, go ahead. Okay. Okay. So let's do sensitivity analysis of interest rate. You want?
Okay.
Okay. So go to data, what if analysis, okay, scenario manager. Okay. Okay, you can delete everything, no problem.
Okay.
Okay. Okay. Okay, and then now you add. Okay, so K equal how much? For example, 1%. Okay, 1%. Okay, now what do you want to change? 16, right? This one is correct. 16. Okay, and then click OK. Click OK. Yeah, now you change that to 0.01. Both sides. Yeah? Okay, click OK again. Now you add again 2%. Easy?
So far, yes.
Yes, tedious, I know, but you need to put it one by one. Okay, and then click OK again. Okay, one more, maybe 3%. Okay, K equal 3%. Example. Okay. Yeah, now 0.3. Okay, click OK. Okay, say, and then you can try show. There it changed, right? Become 3%. Okay, and then you can summary.
The first one, Prof. The first tab. This one.
Oh, okay. This is just no.
This one.
No. Again, come back to bus, and you go to what if analysis. your scenario manager again. Okay, nah, that one. Yes, you click. Okay, click OK. Oh, the result cell. Okay, NPV, right? Okay, there. So now you get it. Now all you need to do is change this. What is P6 a while ago?
P6.
P16. P16 is interest rate of mini fund, right?
Yes.
Okay, so now you change that name in C6. C6 or CC. There. Now you change that name. Mini fund interest rate. Like that. And so, yeah, mini bus interest rate. And then what is that? Now the result, it is the NPV, right? PCR and IRR. Again, you just change the name.
This
Okay,
one.
is it clear? Yes, yes. NPV of,
This one.
yeah,
Same.
that one. The same. Okay, so, okay, you can just reformat. Okay, very good. So, apparently at certain point, the NPV is negative at 3%. IRR is also negative at 3%. Is that correct? So negative is not visible. So you can add, okay, in your analysis in Excel. Yeah. And then summary again. Click OK. There. Okay, now why it's
Negative.
negative? No. So the meaning of sensitivity analysis is clear. Okay, you only change one factor or two factor, and what will be the output? Okay. Is this clear now? You can do sensitivity analysis of any type, no? Okay, using this simple Excel technique. I hope this is useful. Okay, so say you have two variables, okay, and then you can change the value of your input, okay, and then what is the value of your output, and then it will create table for you. Okay. Okay. Now,
Prof, I have
yes,
a question.
go
Does
ahead,
it
Christine.
only work for two alternatives?
No, you can have
Also,
many.
it can be as many with
Yes.
the what if analysis and the okay, thank you.
Correct. Can have many. Okay. Depends on you. Okay, which one you want to set as output, which one you set as input. Okay, but the important is there is connection, meaning there is formula, okay, that connect the input to the output. Okay. Remember, Excel needs a formula. Okay. If you only have constant and then the result is constant, of course that will cannot. Okay, you cannot make a secondary analysis. So you need to connect. One way to check. Okay, again, now I will open this. Can you see? One way to check the formula. Okay, you go to the formula tab here. Say, for example, I want to see the interest rate. Huh? So I click this interest rate. I want to trace the dependency. There. Can you see that? Okay, the arrow. This
Yes.
interest rate is used here. Okay. If you don't like it, sorry, you remove. Okay, in the formula tab, you can check. Or the same thing, NPV. Okay, what is the precedent? Oh, NPV come from this tool. So this is easier to see. Okay, IRR. Or what is the before? Oh, this comes from this tool. Okay, So I hope this tool is also useful that you can use. Okay. Okay. Next one, I want to introduce. I don't know if you are already familiar. Okay, we already learned scenario manager, goal seek, okay, is to do the inverse. So you know the output, okay, the target value. You want to get the input, right? That's goal seek. Okay, and last but not least, this is important, is to do data table. Okay, to data table. So, okay, to do data table, I will create a new sheet. Okay, so you have a P present value, you have A, you have N, and suppose you have F. Okay, say I will put this is 1,100, K is 5%, so in that case 0.05, right? And then N is 3 years. What is the formula? You remember? Oh, okay. Let's give a name so that. So I go to this formula name manager. Oh, yeah, yeah. Create from selection. This one from the left column, right? And then I click OK. Oh, the selection not valid. Okay, I will put this like this and create the selection left column, and I click OK. There, I got that. Okay, so here is now become P, and you see the name box. Okay, here the name is now K. Here the name is now N. Okay, so now F is equal to what? P multiply, right? By 1 plus K, okay, exponent of N. Is that correct formula? Oh, okay. So, and this is the number that we will input. So I put yellow. This is the output. So I will put what color? So orange. No, try to do this first. Can you? Before I go to the data table. So can you try to do that first? So let me search data table revolve to revolve there. Okay. So you can go to Google and then you set data table in Revolator and you will get this what if analysis data table in Excel. Okay. And go to the first topic, input one input variable. Okay. So here, this is what we just did. So you created 3 values, okay, and F. Then what you will do is to create data table. So you create K and F here. So, and then you copy this one here. This one is the K and this is the F. And then after that, you fill up the value of K. Okay, you fill up any value that you want. Okay. After that, what you need to do is to highlight, okay, including this first value. Okay, you highlight. Okay. After that, what you will do is you need to tell, okay, data table, yeah, in whatever is data table, and then because this is in column, so you need to put in column input cell is K, right? So we put K here. Okay, and then you will get the whole table of F for various value that you want. Okay, So let me demonstrate that in the Excel a while ago. Can you see the Excel? So I have, for example, I have K and I have F. Right? This is the input, this is the output. Okay. K, I just put here. Okay. And then the F, again, I just copy from this F. Okay. Now, I will put from, say, from 0. Okay. And then I put this one plus 0.01. Okay. So now I can make it whatever you want, say 100. Okay. Oh, until 7. Okay. And then what I will do is I highlight everything, including these two numbers that I just put. Okay, you hold Shift button and click that so that you can select all, right? And then after you select all, okay, you go to data, what if analysis, data table. Okay, and column cell, okay, is K, and click OK. Yeah, get the result. Magic. So with this, you can now plot. Okay, sorry. Oh. So now you can plot. Okay, so up to here, right? Now you can jump. There. Between K and F. Nice. So using one formula, okay, simple as this. So now you can generate. You can generate the value of F for any K that you want. Okay, can you practice that first? Okay, very fast, I guess. You can share your screen.
Sir, I made a mistake somewhere, but I don't know where.
Okay, let's check it together. You want to share your screen?
The share screening is
Oh, sorry. Oh, maybe you are not. Okay, I make you close. Okay. Share the screen.
So I
Okay.
did it, but it became 0.
Oh, okay. So let's. Is that correct? Oh, I think something is wrong. Okay. Anyway, let's
Yeah, I'm
do
not
it.
sure where I'm wrong.
Okay. Okay. So let's delete the second part. The
Delete
F.
this one.
Yes. Yes. Okay. No problem. Just do it first. Okay. Let's go. You highlight. Let me check E3.
Oh, sorry. E3.
Okay, that's correct. And then F3. Can I see? Okay. And then can I check C5? Okay, so that is correct. Okay, so now let's highlight from E3. Okay, you hold Shift button and then you use arrow, okay, and then to the right one more.
And then I just drag this one.
No,
I
no.
Oh, sorry.
You use arrow, not drag. When you
Oh.
hold the Shift button, okay, you use arrow. Okay. Now you go to data in the menu, data, what if analysis, data table. Okay. And then in the column input there.
Column
Input, you click to C3. Yes, then click OK.
Oh, okay, now it's correct. I don't know where I went wrong. Okay, thank you, sir.
So yes, I hope you can. Okay, any of you, if you have a problem, please share your screen. Let's do it together. Okay. Okay. So all of you can do it without problem. Mayen, Paulo, or Jobet. I cannot see you, so I don't know. How about, are you okay? Can you do it? Data table, one variable. Okay, so if you can do data table one variable, we can go to the second part. Okay, what if you have two input? Okay, this is now you can create a table matrix. Okay. Let's you want to share screen? Any of you want to share screen for one data table of one input? Don't hesitate if you have a difficulty. Okay, we can do it together. Anyone? Okay, Angel, go ahead.
So, sir, it's the same if we change the n.
Correct, correct. You can now change any variable that you want. You can also change the p.
Then in the column,
You highlight first. You highlight first. Okay, and then you go to data table, and that one deleted. Okay.
then this time, sir, we'll use n
And
as well.
yes, very good. Yes. Okay, excellent.
Yes, sir.
So very nice, no? So this is also useful for if you want to do sensitivity analysis. Okay, only one variable. Now, if you have uh, how about if you have two variables? Now you want to create a table between n and k toward the f. Okay. Okay. So let me share this one. So let's go to the second part. Okay. Data table with two input variables. Okay. So in this case, the same, right? The same formula a while ago. So now you put the f here. Can you see? You put the f here, and then you put the n, and then the k. Yeah. The n is on the columns, and then the k is on the row, and then f is in the center, even on the top left of the table. Okay. Once you have that, oh my goodness, what happened to this? Okay, so you highlight. Basically, you highlight this one. Okay, you highlight the whole table. Okay, and then what is the row input? The row input is n. For the column input is P3, in this case K, for the columns. And then row input is P4, it is N, in this case. Don't forget, based on the input that you put there. Don't make it reverse. Okay, so in here I put the column input K and then the row input N. Okay. After that, you click OK, and then you get all the F on in the table. Okay. Is this clear? Easy, nah? So if I make that into the Excel a while ago, so I will delete this chart. Okay, and I will delete this also. Oh, this is a little bit too much. Okay, so this is K, and now I have N here. Okay. So N is I put 1. Okay, so plus 1, so 2, say up to 7 years. And then this one is F. Okay. K is here. So I need to put this up. Okay, the first one. Okay, so I need to put this. Okay, I don't need this. I will just put this down. Okay, I will just make this all up. Up here. And then this is the F. This is the F. Okay, and then you highlight. Okay, everything. And then you go to data table. Right, data table. Okay, what is the column here? The column here is K, right? And then the row here is 1, 2, 3, 5. This is the N. And click OK. I got that. Okay. And of course, now you can change this. Okay, so for example, I change this to 1000. Then the whole data table change. Isn't it interesting? Okay, so say I put this to 500. Again, change. The whole data table change. Okay, so after that, of course, you can, if you want to do more nice things, or you can just color it. Huh? Okay, your turn. So what is data table here? You have 2 input, okay, or 1 input, okay, and you have 1 output. Okay. Now you can, of course, you can generate the table of all this input and all this output. Sometimes you need that, right? Rather than you do it one by one, all the formula copy and paste. So this is faster way. Okay. I don't know. Is this useful? Yeah. Okay. So data tables, analysis table. Okay, so last part here is what the value of time. Anyone want to share screen? The table. Oh, okay. What happened? Oh, okay, you make it. Super.
Okay, sir.
Yes, super.
So I did exactly what.
Yes. Yeah, easy, right?
Right.
Very good. So using this, you can create the table that you want. So all you need is to set the output and then the input that you want. Okay, you can change, of course, the input. So when you change the K on the left side, okay, everything will change in the data table. You don't need to change the formula. Okay, super. Okay, so the last part for today, I want to discuss about value of time, okay, and WTP, okay, meaning willingness to pay. Okay, so in Moodle, I have put there the text and the CVM, okay, text and the CVM. So I don't have the slide for this one. So let's do it in the text itself. Okay. Save. Save. Okay, so let me share screen with you. Okay, so again, this is my previous project. So what is the interesting part here? Okay, we want the government, okay, want to build what is called cultural center. Okay, cultural center, and then in that cultural center, okay, we want to get whether this cultural center is feasible or not. Okay, but how are we going to get the benefit? The cost is clear, right? The construction cost and maintenance and so on. So that is clear already. But the question is, how are we going to get the benefit? So then the cost is construction and maintenance operation that is already given. Okay, so the only problem is to get the benefit. Okay, so in this case, we will learn about contingency valuation method, CVM. Okay, how to compute the benefit of the project, okay, to the people. Okay. CVM is actually very direct. Okay, you just ask the questionnaire, okay, to the sample. Okay, so let me share with you the example of the questionnaire. Yeah. Can you see my spreadsheet? So this is sorry, this is in Japanese. Okay, and these are the questionnaire. I think I put in English here. Okay, so there are only 10 questions. Okay, and of course these are the code for each question. Can you see? Okay, and then this is the real data. Okay, conducted only 50 samples, okay, and 999 mean they did not answer that question. Okay, okay, so then the most important part is the question about willingness to pay. Okay, and this is the frequency distribution of the willingness to pay. Okay, how much are they willing to pay? So based on this value, okay, and these are the frequency. Okay, and this is the frequency relative, so become 100% here. Okay, and from there we can calculate the mean, okay, median, mode. Okay, these are the computed statistics, okay, the usual. And then what I'm doing is to check that frequency distribution against the theoretical distribution. Okay, So here I check against Webull and logistic. Okay. This is logistic probability distribution. And to get the actual Webull parameter here, okay, we need to use solver. Okay, we need to use solver. So we don't know this value. Okay, so this is, we need to use solver. Okay, what we need to calculate is Webull is already in Excel. Okay, so you can calculate, yeah, Webull distribution based on this value. Okay, and then you can get the value and then you compute the chi-square. Okay, I will show you in a moment how to compute this. Okay, once you compute this all, then you plot whether they are actually matched on. Okay, once you get it matched, so you can use the mean or the median of the distribution, of course, from the theoretical distribution. Okay, so that you can use this value for the benefit. Yeah. Simple. This one, mean WTP multiplied by the population, you can get the benefit. Okay, let me come back to this text. So what is the advantage of CVM? Okay, you ask directly. Okay, you ask directly how much the respondent are willing to pay for the given level of service or certain benefit. Okay, okay, how much is the minimum? How much is the maximum? You can ask. Okay, so you can ask willing to pay, or you can ask the minimum they are willing to accept. Okay. So WTA means willingness to accept. Okay. At the minimum, how much they be able to pay the compensation to tolerate certain costs. Okay. So because this is contingent valuation, contingent means hypothetical, so stated preference. Okay, it is possible but uncertain. Okay, so this is called this kind of survey is called stated preference. So you think that it is possible situation. Now the level of service must be shown. Okay, like this. Okay, so this is the I need to show the picture. Okay, and we need to show how it looks like, so that the respondent understand clearly what they are getting, okay, by this service, and then how much they are willing to pay. Okay, so you need to explain more detail about that. That is the most important part in CVM. Okay, so again, the purpose of CVM is to obtain the proposal. It is closer to those if you are revealed the actual situation. Okay, so what is the benefit of this technique? You can observe any situation. Okay, in this is an example only that we are using it for a cultural center. Okay, and then you can ask you can show this is the service. Okay, for example, when you go here and there, so you explain what will be the service, and then how much they are willing to pay for that service. Okay, is it clear? So, and then you can estimate the reaction, okay, based on price. Okay, usually the answer is very clear, understood by decision maker and even common people. Okay, and we can use this to use for economic evaluation, yeah, without any econometric techniques. Okay, and then you can use this for benefit. Okay. What is the disadvantage of this technique? If you did not explain well, okay, the full economic benefit probably did not well perceived by the respondent. Okay, some respondent, okay, they may be unreliable and biased. Okay, they don't want to answer honestly or accurately. Okay, so this is another problem. Okay, so we are not sure whether they answer honestly or accurately. Okay, and probably also any file that you mentioned, okay, they will influence their thinking. Okay, another problem is when your respondent answer is overstated or understated or dishonest. So this is called a strategic bias. No? So of course you can reduce this by emphasizing, okay, how important this is for them, okay, when they give a truthful answer. Okay, and there is also another problem, okay, when the way you present the information to the respondent, the way you question, okay, it may influence their answer. So this is called design bias. Yeah, design of the question. Maybe if the question is too long or too many questions, okay, that's why we only ask 10 questions. Okay, the respondent will feel impatient, then they don't want to answer correctly. Okay, so next, the respondent also, it is possible that they don't wish to think, okay, well about their own answer. Then again, this is called hypothetical bias. So there are many possible problems in this CVM method. Yeah. So, and the last but not least is whether this WTP itself is a reliable measure of economic benefit or not. This is also a very big question. Okay, so I need to state this in the beginning so that you don't feel much confidence. But nevertheless, okay, out of nothing, if you don't know how to measure, okay, CVM is very good method to measure the benefit. Okay, compared to nothing, this is better. Okay, so the design is simple. Okay, you just ask this: what is the maximum amount of money you are willing to pay for this specific service or specific goods? Okay, for example, some of you, I forgot, Resi, asking, oh, if I want to create a road in the mountain, okay, for a specific school, okay, then you can use this also, because you don't know the actual benefit, okay, for the school student, okay, for poor people, then you can ask this. Okay. Oh, another technique is instead of asking how much, okay, you already set the value, and then they will just say yes or no only. Will you accept or not this number? Okay, this is called WTA. Okay, so next, of course, you can make it more complex question. So if they said yes, go to question number 100, or if no, they'll go to question number 200 and so on. So this is, you can create a tree structure in your questionnaire. Okay. So how to compute the CVM? Okay, simple. Okay, you just compute the frequency of WTP. After that, you need to get the theoretical distribution. What is the fitness of this? Why? Why don't I just use the observe? But the observe is only 150 questionnaire. So this is not enough to represent the whole population. So that's why you need to fit to the theoretical distribution, okay, so that it will represent the full population. Okay, and after that, you compute the mean, or the median of the fittest theoretical distribution. From there, you can compute the benefit and the cost ratio. Okay. Of course, after that, you can compare different distribution. Okay, what is the best fit for you? So in this example, okay, this cost is already given in Japanese yen. the total cost is 912 million. Okay, and then this is funded by either public expenditure or local expenditure. We are interested in here, yeah, whether the government need to subsidize on it, okay, by the public. Okay, and then what we need to compute. So fitting, yeah, fitting distribution. How to do fitting distribution? Of course, you need to know the function. Yeah, in Excel there is function Weibull. Okay, you can search in the Excel function Weibull. Okay, and Weibull distribution itself have two parameter, alpha and beta. Okay, and then now you compute chi-square value. Okay, what is chi-square value? Chi-square is the observed of relative frequency minus with the theoretical probability distribution, and then you square it. Okay, you divide by the theoretical probability distribution, and then you sum of all of that. Yeah? The sum of this is called chi-square. Okay, this is the example. Okay, so this is the willingness to pay. Okay, and then you have the frequency. Okay, this is computed so that the probability is just frequency relative. Okay, so you get this, and then you have the cumulative probability. Okay, so 41 and then plus 34 becomes 76 and so on. Now, after that, you can get from Weibull probability distribution. Okay, this is the formula of Weibull formula. This is I get it from Excel anyway. Okay, so then you compute the mean, median, and mode of this distribution. Okay, you don't know alpha and beta, right? But we know the mean and median and mode. And if you check in the help of Excel, okay, you can find that Weibull distribution have two parameters, which is called alpha and beta. So basically represent the shape and the scale. Okay, so the mean of Weibull distribution is given by this formula, the same with median and mode and standard deviation. Okay, this is gamma function. Okay, so that means gamma function is also in Excel, so you can also use. So, okay, now based on this table, okay, we can compute. Yeah, if I know the mean, if I know the median, okay, and this is represent alpha and beta, so you can calculate the value of optimum parameter of beta and alpha and beta. Okay, you can use solver also. Okay, and then the DF, degree of freedom, is this one, yeah. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, so the one that frequency distribution is less than 5 is not computed. Okay, so and then you get DF is 7 in this case, yeah? Based on the number of rows that frequency distribution is larger than 5. 1, 2, 3, 4, 6, 7. Okay, so okay, and then you get the mean WTP, which is 608. Okay, and that is the one that we use. Yeah? You multiply by the number of household in that city. Okay, you will get this one, 75 million yen. After that, we use this to compute the CVM value, which is this value of total benefit divided by the number of years. So we assume 10 years. So, okay, and you divide again with the number of household. So you get this value. Okay. So with that, we get this, this is the benefit per household per year. Okay. With that, we can compute the same table, the standardized table that we already have. So the cost, the cost of the public, and then this is the cost of the total. The total is this one, 912. The public expenditure is only 43. Okay, we divide by 10. Okay, and then the benefit is 75 available. So again, we divide by 10. Okay, and then we discount it into a PV with how many percent? 4% at this given social discount rate. Okay, with that, the cost is only for 10 years, and then the benefit is 20 years computed. Okay, with that, we can compute the PCR, NPV, and IRR. Okay. So I hope this is helpful for you to explain what is the meaning of WTP. I think one of you asking last time, no? About
Yes,
this
sir.
technique.
Yes.
Yes.
May
Yeah.
may I ask?
Oh, okay.
So,
Go ahead.
I noticed there was a frequency of one. There was an answer of 10,000 with a frequency of 1. How should we deal with outliers, sir?
Yeah, this is if you want to do the real outlier, so you need to if you really want to remove the outlier, so uh, there are two possibilities. First, if you already know the distribution, okay, and second, if you don't know the distribution, okay. For example, if you know the distribution is normal distribution, okay, and you set the percentage of outlier okay, let me so for example you want to remove outlier is 1% on the both side, okay. Then because you know the distribution, okay, then you know the mean, okay, and then plus minus k multiplied by standard deviation, right? So the k now depends on the percentage that you set. Okay, this is if you know that distribution is normal. Okay, if you don't know this distribution, there is a technique called Sepizef technique. So, okay, I will find the slide. Okay, I will post it in Moodle. We can discuss about it next meeting if you want. Okay,
Thank you, Prof.
yes. So I think it's a good question. So if we don't know the distribution, how are we going to set the outlier? Okay, and then there is also graphical method. Okay, to check the outlier. Okay, so you can see the graphical method that you can check the outlier. Okay, I forgot the name. Okay, I will show you next meeting. Okay, I think I use it in one of my papers. We can use the graphical methods to check the outlier also. If you want to remove the outlier, but in this case, if we remove the outlier, all one is become outlier. Then the value become very small in this example. So yes, I think that is also correct. No? So if we remove the outlier, maybe the value willingness to pay become very, very small. That is nice. I think we can use also median. Okay, so median is very robust against outlier. Okay, so instead of 600 WTP, now median is 400 something, like 465 probably. So in this case, you can use that against outlier. Okay. Anything else? I hope you enjoy the class today. So we discuss a lot of things, including the financial analysis, scenario analysis, okay, and CPM, and then past sensitivity analysis, and other investment that we make. So next meeting, we will discuss more detail about sensitivity analysis and demand, elasticity. Okay, maybe you already learned also in economic, maybe you don't. Well, let's discuss it together, and then let's discuss PP. Okay, after the PP is very interesting topic. Break-even points. Okay, I'm sure you will get some insight based on the PP. Okay. Okay. Especially we can discuss about risk, shifting of the risk based on the break-even point. Okay, that's probably rarely discussed in any other courses. Okay, so you can read the slide first so that you can ask more questions. Okay, these two topics. Okay, thank you very much for today. Yeah. Oh, can I give you two assignments? The last week assignment you did not finish. Okay, I extended until today, and then the financial analysis about the retirement a while ago, so that you can become the officer of GSIS. No. Okay. So thank you very much. Or maybe insurance company. Yeah. Okay. Okay. So see you next meeting. Okay.
See you, Prof. Thank you
Prof.
Thank you,
po.
Prof.
Thank you.